Hello, everybody. Welcome to the stream. And of course, welcome to the close here where we talk about everything to do with the stock markets, commodity markets, and crypto markets around the world. And it's been fairly eventful depending on which market you've been looking at. Yes, the stock market is down again and it continues its slide. It's starting to look a lot like this S&P 500 will end up get through the weekly 20. And of course, therefore, the Nasdaq being the weaker index at this stage seasonally, possibly having a really big slide on it. The bears are in pretty big control. Let's have a look at the actual session. Let's quickly look here at the 5-minute chart just to have a quick gander at, I guess, like what is starting to look like the bears being in control of the market. The rip, which happened in the morning, has been followed up by, of course, selling. It looks like we're going to see selling into the close, which may even go back down to the low or hover this zone here. And this is the continuation of really decline of the markets. So is it looking good? It's not at this stage. So we'll talk about our expectations of where the market's going to next, and also probably the idea that this is a sell the rumor, potentially buy the fact. A lot of people are going to freak out over the next month to 2 months if this ends up being the sell-off that we kind of are starting to see and starting to expect here. If this sell-off does occur, a lot of people are going to think it's the big crash and everything in the economy is terrible and everything's shocking and stuff like that. And I guess I want to poll the community here and let's see what you guys think. Let me actually create a poll here. Do you think that this will be a crash? So crash really means, do you think the market will go down more than 20%? So I'm going to say that. Do you think the market will sell over 20%? Let's see what you think. Not what I think, what you think. Question mark. All right, let's now ask the community. So feel free to fill in that poll right now, and then we'll find out. A lot of people saying many stocks are falling greater than a crash. Yes, hyper stocks certainly have, but that is standard to all markets. What you've really got to consider is, and what I mean by that is that there's always going to be stocks that are losing 70, 80, 90, 100% of their value in any market condition. The difference is what is going on with the big blue chip stocks. So if you were to go and get the top 20, top 100 stocks, have they dropped that much? So we'll find out what you guys think soon. I'm starting to feel pretty bearish though on the opportunity here in the next month to 2 months. And a lot of that comes down to what we spoke about in our first video of the year, which is, well, two things. One, increased volatility throughout the January into March period. Obviously, this March period is skewed. So usually I'll look for the January period, which is based more on previous years, the seasonality of weakness that we start to see through the S&P 500, and of course, the technology sector sideways action to down action. February being the worst month on record for the last 20 years for the technology sector. It's hard to really get past that. And I think that's something we need to just consider. Now, is it time to freak out? So you guys right now have got 77% of you saying no. And I think that means you are relatively correct here. The market's unlikely to correct 20% and therefore create some kind of crashing scenario. Can it do it? Anything can happen, but it is unlikely to occur. And some of the reasons why it's unlikely to occur is this inflation story. While the bond market's getting carried away with itself, we can see here, even today, the 2-year yields come down slightly. The Fed's like down here, and basically the Fed's playing catch up. So consider this. The Fed is playing catch up to the bond market, but what do markets tend to do? While they're efficient, they tend to overshoot areas, and they do this as more of a trap than anything else. So if we think about where all of these things are at and where the Fed in reality is probably going to be, rather than Jamie Dimon's 7 rate hikes, which I still don't see happening, it's more likely that we get that kind of 2 to 3 rate hikes throughout this year, possibly even just the 2, and that actually stabilizes this inflation stuff, especially if the stock market sells off first. Because remember, when the stock market sells off, what in fact is happening? People are freaking out, and possibly people are also losing some of their money. So let's actually have a look here at a stat that was handed to me by someone in the private community. Thank you very much. And this is a stat of S&P index performance after the first Fed rate hike. Now, no two things are the same. So let's think about the data here and consider what happens back in 15. So you'll notice that the first rate hike happens, market after the next 3 months was down. And this is down over the 3 months. So, of course, it was more like this kind of thing. Now, what happened over the next 6 months? It was flat. And what happened over the next 12 months? It went back to being bullish. And this is a similar scenario to what we're seeing this time, except that the market is selling off early. So consider that our next 3 months is probably already happening into the fact. Then the fact occurs. And I wouldn't be surprised at all if, depending on the wording and stuff like that, if we actually see a buy and the market starts to rally, and it does depend where the market is at this point, when the reality of the rate hike comes in. What do you guys think about that? Is this a sell the rumor, buy the fact kind of year? I think it could be, and it all depends on whether the market continues to sell off right now. If it does, a lot of this negativity that comes with rate hikes could be put in. But remember, the longer term picture still gains after the 12 months, after the 6 months. In all markets, they were up, in all of the most recent ones. Let's see what the chat has to say about this. John Jonestown says, averaging into growth funds in the 401k, plan to be fully vested by the end of March for the long haul. It's not a bad concept. So good work, Jonestown. Of course, stick to your plans, whatever they may be. I can't tell you what to do, but cool. Sounds good. And Neon says, so max down just 7%, lol. Alts are down 65% this month. Well, if you're in crypto, yeah. But you are misinterpreting the factor, though, Neon. Let's consider what is more like a crypto. More like a crypto is probably a hyper growth stock, and they're down a lot more than 6%. Yes, the difference is blue chip versus crypto, and this isn't taking into account technology either. This is just the S&P 500. We've seen sectors go up. What happened today? Commodities exploded. What is that doing? It's actually got some sectors in the S&P 500 doing well. So just remember that it's not apples and apples that you're comparing there. You're comparing apples, oranges, and all sorts of other things. Tesla likes 1K. She's fine, says Finken. Okay, we'll find out whether it can hold that up. And Dollar about to get a pile diver from the top rope. And a few other people are saying that seems about correct. Feb, Nikita says Feb with 1.4% Nasdaq. Look at Jan with over 10% drop. The statistic is no way an instrument to look at. You're wrong there, Nikita, but okay, fair enough. You can claim that comment. The reason you're wrong is because I don't care about the percentage drop. I care about the seasonality weakness. Okay, it's not about 20 years. Yes, there's 1% drop. We're in a market that's very different from all others. If you look at the January data for the S&P 500, it actually has the 1% down over the last 20 years. You only bring stats into the concept of your TA. I've never said that stats will work. If you go and trade every single stat in the world, you would most likely be not correct. However, when you bring TA and stats together, that's where, and of course your fundamentals, what you're doing is you're bringing data that all has slight significance together and you're stacking it to put the odds in your favor. So that's something that you really would want to be doing at. It's just like, January. Why do you think I started going bullish on gold in that December area? Because in that December area, that's when the stats change. The stats become positive for gold for December, January, and into February. And January is the best month on record for gold. Now, the average is only 2.3% for that month, or 2.3%. But that doesn't mean that it can't do more. It just means that I'm starting to look for the right technical setup. And possibly we've seen another very nice closure out here. Well, it looks like we will on gold for today's session. We'll talk about that soon. So, yeah, very important to factor those in. Looks like we're going to close on the lows. Everything's selling off. We've got 20 or 19 minutes into the close, and that will be an interesting point here. Once the market gets underneath this zone, it's basically made a new low. I mean, what have we got? We've got the peak, we've got the trough, we've got the lower peak, and then we've got the lower trough. There it is. So we really have that closure on the daily time frame. We had it on the S&P 500 in the previous session. Got a little bit of a rip this morning. So we go to the 5-minute chart. You can see that small buying up. And then by the end of the day, it looks like the bears are back in control. So they're going to try to push this thing down. Now, what I'm looking at really is just weekly 20 as well. I want to be pretty well aware that this is closed. And it doesn't mean you have to make money from the sell. So let's say we see this weekly 20 close below. In terms of significance, it's incredibly significant. In terms of next zone that we expect the market to be able to go to, it's like that 4,300, 50 exponential moving average area. Seems quite likely. And that's the type of thing that often technical analysts look at. It doesn't mean you have to sell, though. Selling is not easy in the stock market. I've always said that. And buying is much easier. And you can just wait for the opportunity, wait for the basing down in these areas instead. There's nothing wrong with doing that. There's absolutely nothing wrong with doing that. What level if Buffett's buy order? I think Mountain is saying, yeah, we can certainly have a look at where Buffett would buy, but he will just buy a price on certain of his stocks. So he would just add back in. I don't think you would know exactly where he's going to buy. And look, the thing is it really Buffett anymore, or is it his team? I mean, his team has gotten involved in some questionable trades in the last couple of years, things like Teva and a few others. So we've got questions coming in about Amazon. In general, these stock markets are all falling to their lows or holding around underneath. So again, that is a negative sentiment for the day. Let's just have a quick look at IWM before we go into the individual stocks. That's pretty much, I mean, that's a full-on break, isn't it? So the weakness we saw in IWM seems to be here. It's hard to believe that this can turn around without, like, it will have rip rallies. Just don't forget, you are going to get rip rallies, but it's hard to believe now that this isn't in a bona fide downtrend that's going to try to get back to that 186. These are the types of things that you look at and you think, oh, you know, is it all over for the economy for now? In terms of just some sell-off for the time being, get that S&P 500 down that 10%. And then, of course, we revisit it. I think a lot of this has got to do with how much the US stocks are up in comparison to the rest of the world. They're about 30 to 40% on top of, say, the ASX 200 here in Australia. The FTSE is starting to recover thanks to commodities, but the US tech stocks are still well priced here. So yep, opportunities coming, guys, and it should be holding around. Let's go through some individual stocks. Tesla holding at 1,000 for the end of the day, only down 2.6%, which is much better than it could have been. And it's holding up. So this allows day traders to come in. Now, some people are just going to buy 1,000, which is fair enough. Think about the sequence coming into this. It's not the usual just kind of slap straight into the price. It's more of a sequence similar to this time, which was it came down, hit a level, and then sold off back down through the level. That's kind of where we're at. We've come down. We've created a little bit of selling here. The 4 hours now got a 2050 cross on it as well, and we're at 1,000. If you're day trading, I think that this is one of those ones where you really want to be looking at Tesla heavily in the next session, because if you breach certain zones, e.g. this zone here, you're going to be going with a rip for the day. So as in a market going up. And if you're going to be seeing it go underneath 1,000 and close below, so let's say it goes like this, and you get a shooting star here, could that be a really good sell for the session? Absolutely. And don't think that Tesla can hold itself if the stock market continues to fall off. All stocks will generally fall. I mean, some sectors might do okay, like commodity sector right now, but in general, most will fall if the ask goes through. So 1,000, we're at the support. What do you guys think? Will Tesla hold this zone? Let me know right now. We'll close the poll. We'll find out the result. So let's do that. So end of the poll, no was 74%. No was 74%. So most people expect that the market will fall, it'll correct, but it will not go over 20%. I tend to agree with you. Tesla, zero chance, says Gary. And Kevin says no to Tesla. And then Laurie says Tesla to 900. And what's my feeling on Tesla? My feeling is it'll go underneath 1,000 this time around. But that's just a feeling. I mean, I don't know. You never know. I mean, these are why I come in for the day trade if you were going to do that, because this would be the type of the next day of trade so important. I mean, let's look at these previous candles here. We've got effectively very similar to the rest of the market, a peak, a trough, a lower peak, and a lower trough potentially coming through. But really, it's more about the previous day of candle. We've got a shooting star rejection candle coming into 1,000. And while it's holding 1,000, if the rest of the stock market falls, so will Tesla. And Tesla will get through this. And I'm not saying it's going to epic lows or anything, but it could certainly come back and test our trend line and our $900 price. So I think it's one of those ones that I'd be watching on the open, looking for the day trade. And that's what it's become since it's in its sideways action. That's very, very wild. Once it had that big rip on it, it's been sitting in the sideways action for quite some time. And now we look for really just day trading opportunities and investment grade levels that we're happy with holding your sentiment over the longer term. So someone asked about Amazon before. What's our thoughts on that? Well, it's very similar to the rest of the market, unfortunately. That rip that came in at 37.58 was all we ended up getting. We did have a plan towards the 4,000 coming into the November seasonal for consumer discretionary. And for November, I guess it did still rip. It still got up, but not as much as we'd hoped. And Amazon's still, I think, investment grade, and I still think it's underperforming the rest of the market. But in terms of where the price action is, it's hard to see necessarily weaker than the bottoms down here, being the 2,900. It is still declining. I mean, this hard to go here and go, oh, wow, I love this TA. You can't love the TA. Is it holding up better than the rest of the market? I mean, around these levels, I guess it's lost about 6.68%, so kind of in line with the Nasdaq. And where could the base be? Unfortunately, it could be around 3,000, 2,900. We don't have a turnaround story just yet on the price action. Every single time it tried to rally over the last couple of months, it's been fairly weak. And that's the main problem with, consumer discretionary, is that it can be quite seasonal. And this stock has been incredibly underperforming. So this is now from July 2020 to now, it's the same price. So that's just shows you how fast the price in the market revalued itself. I don't think we're going to go underneath this low, but yeah, I could see it coming back here. Apple broke the 50 DMA. Let's have a look at Apple. Yeah, another bad sign for the market. You are correct. The 50 exponential moving average. A lot of people using DMAs, it seems, at the moment. I'm not sure why, but anyway. Yeah, it's breaking underneath. And yeah, another bad sign. Peak, trough, lower peak, lower trough. Consistency across the board. I mean, let's look at the facts here. We've got S&P 500 underneath the trend line. We've got Nasdaq underneath the trend line. We've got IWM underneath the trend line. We've got Apple, the biggest stock, underneath the 50 exponential moving average and our overall range. So is the negative sentiment driving in? You would think so. The market's going to have a little bit of ability to deal with itself until we see the FOMC statement like next week. So that's going to be another factor. We're getting some, not so much well-known hedges, but we're certainly seeing moves here of gold and silver and oil and all of those types of commodities running out of control and starting to move up hard. And this is another sign of weakness. So is this a time to be executing every single buy order you've got in the market? Probably not. I mean, this is the worst market I've seen, like SPX, that is. This is the worst technical we've seen on it since over here. And realistically, pretty much the worst technical since the pandemic bottomed in terms of weakness. And the reason is because we've got that peak trough, lower peak kind of area, or lower trough area over here. So lower peak, lower trough. But it's also gotten through a lot of moving averages and a lot of trend lines and stuff. And that's across both the NDX, which didn't end up falling through last time, and the SPX and IWM again, and AAPL. So in other situations, we've usually had one of these, a tick, We've had one of these, tick, and we haven't had the others. Now we've got tick, tick, tick. You know what I mean? Like the case is not good. What do you guys think? I mean, we suspected that this would be a big fight zone, and it looks like this weekly is not going to hold up. Xjexter says bull trap alert. I can feel correction in your voice, Tom, says Vinay, probably just because it's morning. Yeah, it's all good. I'm excited for the 50 exponential moving average, but I understand I've got to also realize that a lot of people here are going to hurt through this, and that's not cool. You know, it's never cool to know that people are not doing well through these types of things, and maybe they're not prepared for a 10% correction or a 15% correction on the markets. If you are prepared, and what I mean by prepared is mostly just being able to hold through that time, have a plan, and be ready for your favorite high conviction stocks. I mean, this is the time that you should be preparing for what are you going to do? What is your scenario? Let's say the SPX does come down. Let's say it goes towards the weekly 50 exponential and moving average. Do you have your high conviction stocks ready? The trades are just going to happen down there if it does get down there. It's going to be, there's trade opportunities going to be everywhere down here. But what about your investment grade stocks? Do you have a plan? Somebody before said their 401k, they're going to average positions here, and they're going to potentially find other areas that they're interested in, and they're going to buy their high conviction stocks for the next couple of years, and they're going to look at tech. It's totally valid. We expect that seasonal weakness of tech, and then of course a big rip rally, and we're hoping that rip rally happens into that April, May, March period. So let's hope that happens. BTC analysis, please. We certainly will be doing this. Franklin Matthew says, I'm going to hold these bags as usual and wait for a turnaround in what I want more of. Fair enough. There's nothing wrong there, Franklin. And you're waiting for the base. So what you're saying is you're going to wait for BHP style scenarios where you're seeing this nice bottoming effect occur on the market or something similar to this, and then you're going to add to your positions. And I think that's a very valid way of looking at the markets. Absolutely. Daniel says, I'm waiting for a 20 to 30% correction, getting ready to buy stocks in March, maybe. I think you will see 20 to 30% on certain stocks, but just remember that's a fairly significant pullback and quite rare statistically. So a lot of people often look for 20% when they should be looking more for maybe the 10 to 15%. So just be careful there, Daniel. It can be difficult to get those kind of drops. Not saying you can't, but yeah, it can be difficult. And Mitch seems to be in cash. Wow. I'm in cash now. Oh, trading account. Yeah, it makes sense. You may have gotten stopped out on some of your trades and ready to sell some puts. Fair enough. Make sure you think about the cost of those puts because they're going to be upwards high now that we've got the VIX so high. Remember, if the VIX is above 20, puts can be expensive. You've got to have a strategy on how to get a hold of that. Gary says, Tom, another stat for you. During midterm elections years, the average drop is 17.1% and median is 16.3%. And it's a midterm election year for us. I can email you the stats. Yeah, bring them through to me. I've seen stats around it, Gary, but yeah, send them through. Why not? And then we've got Mohammed Al-Masari. Thank you very much, Mohammed. AED, $25. Hey, Tom, I know the TA on gold looks bullish as it broke a major level. It certainly did. But do you think it continues if the DXY starts strengthening again? Look, we've seen a few times where gold and silver have actually continued up while the DXY started strengthening. It can happen. I think gold will try to reprice itself relatively quickly into 1870. That's the resistance. That's the kind of aim that we have for gold. And we've been waiting for this. We got the inklings from silver in the last session, or the last two sessions, that it was looking strong. And hopefully we get that follow through. But now it's through the 1830. Yeah, I do think gold can hold up against the DXY, but not if the DXY goes ballistic. So the answer to that is not if it goes ballistic. And just on gold, 1830 breached, closed above. Now you either look for rallies into 1870, you're in the participation phase, or pullback, anything to this 1830. We should be looking for double bottoms, lightning bolts, bullish hammers, any of those types of things occurring here. It's going to be very, very important. And then 1870 is the aim. And if it continues to rally past that, And then, of course, we have our next levels as well, 1910, 1960. So it's good news here for commodities traders. Gold up, silver up pretty hard as well. Silver ran in the previous session. Let's have a look at the daily just to get everybody understanding some of the key zones we liked. There was our closure breakout from the previous session. We obviously had our key resistance. We had our lightning bolts within lightning bolts. This was itching for that, and we had it in the previous video, so that was pretty good. Let the markets burn, SP says. Huge money to be made on the downside. Yep. Again, what is your expectation? Do you think that the markets are crashing to the point where they're really going to burn, as in it's going to be a GFC style event, or are you just planning on selling down to that level, like 10%, 15%? Mountain Fortress says UK has ended all COVID restrictions, so pandemic is basically over. I think this is just an attempt to cover pandemic era shorts that are down like 16,000%. I think it's more than that. It's got to do with interest rates. Interest rates do initially scare markets. And as we come into the close here, the markets are continuing to sell off a little bit harder. So you can see they're now down about 1% and 1.25% respectively. And Irene says SP 500 to the 300 EMA. What time frame? Either or. 300 EMA is an interesting one and quite deep. Someone asked about Microsoft before and what we think about it. So Microsoft purchased, obviously, Activision. I think overall that's a fairly decent acquisition for them. They're buying it at a time where we've got NFTs starting to come in. That will be a direct fit into games and video games in the future. And look, let's face it, no one could run Activision worse than Activision ran themselves. So Microsoft are getting very powerful here. They're not going to make them exclusive to their Xbox. Maybe there'll be a few games that'll be exclusive from the publishers. It's a relatively good acquisition, but overall, again, resistances here. This particular daily close, Microsoft doesn't look that great. I could see it coming down. Is the company overall incredibly solid? Yes, it's doing very well. Very well. And they've changed public perception. I mean, if you think about public perception on Microsoft and you go back to 2013, 2010, it was like one of the most hated companies in the world. But nowadays, Microsoft seems to be in a zone where it can do almost no wrong. The team stuff's done really well. Office 365 obviously revolutionized their business. And they seem to be like one of the companies that people like again. So when under Barmer, it was madness. And then since then, it's been okay. Is a bounce tomorrow unlikely with this close? Or SPX, let's have a look at the close. No, it's going to close right on the supports of the next level. Most mornings you would expect some kind of rip rally. And the reason why is because who trades the mornings? Retail. So if retail trade the mornings, as in we see huge buying usually in the morning rips, not you guys necessarily, but a lot of retail traders usually see a bit of a rip in the morning followed by that speedy sell-off. And this is across the board. IWM down 1.59, US 30, US 100, US 500, they're all down. 738 people joining us. Thank you very much. Could dip some more. Well, for sure. Suckers in the morning, says Johnstown. Yeah, unfortunately, a lot of people make the mistake. It's good if you want to day trade and you want to look for the reactionary kind of like false moves, but it's not really the best time to be buying stocks. You are correct. Leona says, crash cannot come when everyone expects it to come as it is now, guys. Really? Does everyone expect that? I mean, I'm interested. Is the general opinion out there that we see a crash, or is everybody's opinion like 20% more? Not doesn't look like the community thinks that. But yeah, in general, it's hard for that. Blizzard can only do better with Microsoft when you start from the bottom. All paths lead up. That's right. And I'm a big believer that it's like Take-Two's acquisition. You know, I'm kind of confident that the Zynga will end up working out well for them. Because again, what's Zynga? It's a hideous game company that makes all these little weird games that will create that is a perfect fit for NFTs. So if we've got a perfect fit for NFTs, then that also could be a long-term play. Because while NFTs, I call them in stage 1 right now of madness, they'll eventually enter stage 2, stage 3, and then go wherever they're going. And I've heard some interesting stuff about it. Obviously, the staking of NFTs, the airdrops, all of these new fandangled ways that you can make money. So Tesla ended up closing underneath 1,000, guys. So 995. Just be a bit careful here. I could expect it to go to $900, just because of this sequence, and more importantly, the previous daily close here, which was a bit bearish on the sell-off. It had that rally, probably trapped a bunch of people into the options, and then fell down. And it's kind of like what we've been saying here with the calls open. I don't know who opened so many calls. That's weird that there was so many calls expiring this week and that people were buying hard on this 500 for options calls. All right, let's go through the other markets here. We'll just go through some stocks. Everything mostly down. Nvidia on its way to the 230 continues to weaken here. Not so good. Hyperstocks didn't lose as much today. If you notice, if you go through, I mean, Square's still down another 1.43%. Jack Dorsey will rue the day buying Afterpay. Oh, I remember that day. I was so bullish this stock, and then that Afterpay acquisition happened, which was what, here, wasn't it? This is the worst buy, man. Such a stupid ass. Or a block, or whatever it's called at the moment. Afterpay has no moat, guys. Remember, in investment, whatever you're buying, always consider what I call the rich dude's way of analyzing markets. And that is, what does your business have in terms of moat? Look at some of the bad stocks that have done really poorly recently. Piton, ZM, tough moats. More of a fad. Could create a moat, by the way. ZM could create a moat. But moat is very important, and that is, how hard is it to enter that business? How much competitive advantage does this business have over others? And unfortunately, they purchased a business with a third of their money. So now they're worth $59 billion, and they made an acquisition that was, what, 20-something billion US dollars. Is that right? 20-something billion US dollars, if I remember rightly. So 20 to $30 billion, and they're only worth $60 billion. Crazy. It's the type of stuff that can literally kill businesses. I hate it when they acquire such huge portions. I mean, Microsoft might have made the biggest deal they've ever made, but the company's worth $2.27 trillion buying a cash cow that's been around for a very, very long time. They can easily afford it. It's only a very small portion of their funds. That's the type of acquisition you want. I'll give you a top tip that I made a mistake on. If a company ever acquires around 70% plus, and I know this isn't what Square did, of their own market cap into another business, it is a massive red flag. Be careful, and you better understand very well what they've just done. Buying opportunity or not just yet? Probably not yet. None of these. I just look at the charts. I mean, are you seeing, does anyone see a great chart here? I mean, I see SPLK as being pretty good bottom. SPLK is actually holding up. This is one that I talked with the room about this week, and it's held up pretty well. I mean, SPLK, now that's basing. Materials still basing, materials still moving. But these other stocks, look, you look at Arcade, that looks like it's still continuing to really decline heavily here. ArcG, still declining here. No turnaround stories yet. TDOC, the hideous thing itself, still declining. Twilio, still declining. These are just in free fall. And when you have free fall, the only way to get out of free fall is to usually base off. I'll show you a stock from Australia that most people won't know. But this is a classic example of a free falling hideous market, and exactly what ended up happening with it. So let's get rid of the monthly pivots because we don't need those. And of course, I'm being a nufty here. Oh, why are they not highlighting? There we go. All right. So this is a good example of a declining market that was declining for some time. And if you go back and watch some of our webinars on FX Evolution Live, you'll see we actually changed our tune and turned the story around for here. But this was all the way through the pandemic. Everyone else was recovering and this stock was getting obliterated. Weekly 20 sell off, weekly 20 sell off, weekly 20 sell off, etc., etc. If you actually go in, there's a trend line down as well. And only through the power of an actual double bottom or a decent accumulation basis. So we had kind of like a start base here. And then, of course, the eventual. Look at the rip rally that happened. So this just shows you there's markets within markets. And this particular stock saw a small increase in volume. There was a big increase over here, which funnily enough was two funds transacting their ownership structure. And whoever authorized the sell of the fund here to the other fund must be pretty sad with themselves because that is pretty much the bottom. And in a few weeks' time, was up about 30 something percent. DKNG still declining. That's correct. DKNG is still declining. Very difficult to find the turnaround story here. This is the type of thing you're looking for, though. That type of thing with a breach up. That's all you need. Just need some turnaround story here. We talk about the lightning bolt all the time. There hasn't been one yet. We need the lightning bolt. Will DKNG go to $10? I'm sure Scott does not want that. Fair enough too. But next stop's like $20 for it. Could be a good stock in the future, though it does burn cash. But at this stage, all these markets are not showing us turnaround stories. There are markets within markets, though. I mean, the market really likes this idea of Take-Two's acquisition. I think a lot of that's to do with the NFT hype at the moment. So be a little bit careful there. But they buy Zynga, and then all of a sudden they're right back up. The market obviously really likes that purchase. Justin Sands, $4.20. Thank you very much. Could you find me a good entry? So could I have a look at it for you to go long onto? So obviously you've got to make your own decisions, man. I can't tell you exactly where you should be buying something or anything else. I assume you're talking about not the stock and it's the crypto, or is it the stock? I'm going to have to go with the stock unless it's the crypto. If one of the mods can grab it when Justin responds, just let me know. And we will check that out. But we're going to assume it's the stock. It certainly could be the crypto. Find out. I have to look at the monthly here. Whoa, it's been on a big rally. Electronic production equipment. Okay. Weekly. Johnstown says, I use the DKNG product and love it. So does Kathy. Yes. It's on to innovations. Perfect. Okay. So that's a big rally already that's occurred. Can it hold up against the market itself? Doesn't look like it. Looks like it's selling off into earnings. I mean, your first support is going to be around that 88.25, but this also is quite open. I mean, you've got first support here. You'd be looking for turnaround stories here, lightning bolt, big hammers, engulfing candles, that kind of thing at these levels, obviously with your own system. And then the next level, should the rest of the market come down, is here. I'm not sure exactly why you're liking this stock so much, other than it's been in a fairly decent trend for quite some time. If you want to invest into it, though, these are your two main levels that look like they've got good technical support resistance. And I think a lot of it's going to come down to also, if you trend line this, the 200 daily, the previous resistance becoming support, and a trend line will all meet up at around the same level. So I think that's something that I'd be also considering on a stock like this. Patrick Bateman, $4.99. Tom, is there any chance PayPal could hit 270s in July? I'm in calls with the strike around there and have been buying the dip. Obviously not Fin advice. PayPal, that's through, I assume it's base now, yeah? Didn't get the turnaround that we wanted. Formed a great accumulation base. Credit to it. I mean, it was a very good base. Just didn't get that 195 plus, which would have been, for me, I would have actually triggered a buy there as well. Can it get to 270? Oh, by July. Well, I think there's going to be a turnaround story in hyperstocks. It's a pretty big ask for it. It'd have to knock the absolute earnings out. You're probably going to know in 13 days, because when you get that earnings, especially since PayPal and obviously eBay have stopped working together so much, we'll get a bit of an idea. Still a lot of transaction volume going through for this stock. You can see the volume is still quite high. So there are a lot of buyers and sellers, but we don't have the turnaround story yet. It's hard to tell whether you could even get 270. I would go with, unfortunately, not, but that doesn't mean they wouldn't be worth much anymore either. So, you know, is it really worth closing them off? Unfortunate, man. But I guess at least they're calls, so you've got your max risk already put in. I mean, buying stocks and not having stop losses. Remember, always with trades, one of the top tips that I can give a lot of people is, with trades, you have a take profit set. When you enter, you have your entry set and you have your stop loss set. And when you have all three of these set together, then you can really not necessarily be in trades all the way down. You forget about them, you move on to the next one. But if you have a entry with no stop loss or no stop loss, you're really more doing a investment style concept. At this stage, I don't see PayPal turning around just yet. Matt says big support level on the SPY at 450. If we break that, I don't know. A lot of it just comes down to the weekly 20 moving average. You're right, 450 is a big level, but we're pretty close to it now. We're only about 36 points off 4,500. Thank you for the support there, Patrick, as well. Appreciate that. From a TA perspective, can a great weekly close invalidate confirmed daily breakdowns? Yes. I wouldn't surprise me if Wall Street head fakes us and reduces trend lines this Friday. That's why, again, I don't suggest to most people they short. It has happened before with the SPX. So if we think about the weekly 20s, go back over history, it's a good point, Chris. And this, again, why selling markets can be quite difficult. And usually you have to do it with options. You have to do it a certain way. Think about all of the fake almost breakouts we got below the 20. And then on Thursday and Friday, what happened to the session where it had that big turnaround story and all of a sudden you were above. If you're just looking at buying the dip options, there's nothing really wrong with this, because we ended up still being able to get back into the market around here and rally that market. You still got 2/3 of the move. There's nothing wrong with not getting the perfect price. By really recognizing this type of phenomenon. I don't think it's going to do it this time, Chris. I feel like, yes, this is a bona fide proper sell-off that's going to occur and continue, but prove us wrong. If we end up getting the weekly up back above there, then that invalidates, yes, a little bit of the daily closes. RK is supposedly a 5-year time horizon. If you can hold 5 years, it's probably a great investment. It's starting to get pretty damn good. At least credit to Kathy. They did warn above bubbling kind of ideas in that January, February of last year. But yeah. And Naked Trader says no chance at all PayPal will hit 270 this year. Yeah. Johnstown says, I will hold RK as long as it takes. Don't plan on taking a loss on companies that I use and love. Fair enough. Absolutely. That's investment. You got the diamond hands. I mean, we haven't used that term in a while. That seemed to go out the door as soon as... Actually, what is our good friends at AMC doing right now? Yeah, so as we suspected, we stopped covering this really around this area, didn't we? Yeah. The sentiment is gone. And Gary says that's the bear channel. Thank you. Thank you there, Gary. Put wallet 450. We can have a look. I'm actually pretty bullish on the economy and everything going okay, but I do believe that the correction could be in here for a little bit. We'll look at crypto in just a second, guys. Thank you very much to the 730 people joining us. Let me just bring up the old SPY. And maybe we'll go for, I'm just thinking whether we go for the next week, 28th. I've got the 21st here. So this is how many calls, still a lot of calls being opened. So someone keeps buying calls, which keep driving the market lower. There's more calls here than puts. Who's doing this? I'm really surprised. I mean, I guess I shouldn't be surprised that people are opening up tons of calls. They're conditioned to buy. This is one of the worst times I would think is to condition to buy. You know, huge positions in calls and stuff like that. Put wall sitting around 450-ish. But it's not a huge put wall. You'd want to see it increase itself in the next day of trade. So maybe when we get more option starter in, this will increase. So around that 450, yes, there is some puts. For the next week, let's have a look at the expiration for the 28th. Have a look what's here on the SPY. See if there's a huge amount of puts anywhere. Okay, so this is where things change up a little bit. And we've got quite a lot sitting around there, you would think, and a much, much overall more bearish week on the markets in terms of puts versus calls. All of it will come down to the FOMC statement, and you better be aware of that. And if you don't know when it's coming, then scroll through your economic calendar and make sure that you're well aware that on Wednesday, January the 26th, we will have the FOMC press conference, federal fund rates, and the statement itself. That's going to be a big deal. Randy says it's Kathy opening the calls. Yeah, maybe. All right, let's move over to the crypto markets here. We've talked about the stock markets. Our thoughts are still to the bearish side, with most rallies being probably sold off. Weekly 20 is still going to be the big determining factor on whether we're more bearish on the markets, and doesn't mean that you have to sell. Just remember that. It just means that you have to have a plan for where the lows go. It's not a broad-based sell-off through every sector. Some sectors are still doing better than others. Let's have a look at Bitcoin. It held up okay over the last 24 hours. I actually expected it to get belted a little bit more and to sell off more, considering that the stock market has continued to sell off. It's been quite susceptible to the Nasdaq and the S&P 500 falling down. So is this still positive or negative for the crypto markets? Yesterday, we saw a bit of a rip rally here on the daily. It started to rip up. It had absolutely no follow through. And as we said, we needed the follow through. I think that's the easiest concept if you want to get involved in the crypto market right now. It's to look at something like a 2-hour here, to look at a breach past this level, and then there'll be some day trading opportunities around here. But as we sit in this zone, hard to really get positive on the market. The other thing I want to remember or remind everybody is that while this crypto market has been bullish for some time, we're not bearish on it yet. We cannot ignore, the overall, which is, of course, the left shoulder, head, right shoulder, mass head and shoulders, and just the importance of 40K in general. Does anyone think that actually crypto and Bitcoin could go all the way to 10K like this thing predicts? That's actually what this head and shoulders predicts. It predicts the end. Do remember as well, we're into Chinese New Year. That starts, I think, 1st of Feb, and it's going to be a little bit of a scary time because around Chinese New Year, we've tended to see weakness in the crypto market. There's actually a seasonal weakness that occurs there. So do remember that. I'm not sure if it happened in the last 2 years. I didn't look anymore, but I remember back in the day, that was a real thing. You would sell into the Chinese New Year. M3 says it won't hit 10K. Nope, that's just a TA prediction. I agree with you. Unlikely to hit that even anytime soon. Crypto is volatile. Yes. And then Gary says, I would back the truck up if BTC hits 10K. Here's the interesting thing, Gary. If BTC Like, this is what a lot of people said about it over here. So obviously I've been in the markets for a while. I remember when the market was here at 20K and people said they would back the truck up if it hit 10K. They weren't there. So I'm not saying you wouldn't be there, but just remember that you've got to remember what your bigger term picture is. And this is why the FUD and the scariness and the fear and everything like that can often make you lose faith in what is your trading system or your trading goals. And when the market was over here, everyone feels easy about buying a cheaper price. But when the reality comes in, are you ready to pull the trigger? Something that's very important, actually difficult for many, many people to be able to pull the trigger. So BTC still looks a little bit all over the place. Ethereum is similar. At least Ethereum's come down and hit the support. Again, rallying off that buy level there. And we're looking for follow through. A lot of crypto coins are down as much as 70% right now from the peaks. So it's really putting a lot of pain on people. And what we're looking for is just any pull up. We obviously want 3,400 on Ethereum to be the double bottom. At this stage, you would think it would have ripped better today. I mean, what did gold do? It went up. The DXY went down. People went to safe havens. Look at platinum. Platinum up 4.91% for the session. Yet, our old digital golds couldn't get it done. Bobby Chang says Tesla earnings and FOMC meeting on the same day. It's like the 2 combo meal deal, but not a good one. Yeah, that'll be an interesting day, won't it, Bobby? Bit scary. The Bev 30 says crypto is done for now. Get out. And Muhammad Al Masari says TA makes it easy to pull the trigger. That's true. It can make it a little bit too easy to pull the trigger as well. But yes, it can improve your trigger buying. I didn't take BTC seriously back in 16, 17, but I do now. I understand BTC and how its price action is. Scaling in at 10K would be ideal, but I don't think we will go there. Seems a little bit too low. What if both are good and good times? Could be scary, could be good. It's only scary because it's an unknown. Remember, uncertainty is the big deal here in the markets. And this sell the rumor, buy the fact tends to be the way that the market looks like it's doing it right now. So all of these cryptos, while they have been going down, they're still holding the major key supports. BTC shorts actually dropping here in the last hour, the last day. So that's good news. A little bit of decline. Still not high enough to be really concerned about, but getting there. BTC shorts, we've seen how high this has gone in the past, and the whales always won out. So we can't ignore it, but it's not in perspective anywhere near these 10,000 plus numbers. Are we oversold on the S&P? We'd be oversold by a lot of indicators, or at least starting to go down. But no, I don't think it's necessarily oversold. We closed on a support around that 4,500 is a support. Weekly 20, expect rip rallies. Tough to really know exactly what you should be doing here. Most markets are showing decline. Apple underneath the 50. Showing weakness. IWM, new low, 204, showing weakness. So again, the drop-down list, go back and watch the video. We did a tick list, and so far, every one of the markets is pointing to weakness, which we haven't seen before in any of these previous corrections. That's the problem. This is the first time we've seen such weakness across the board. I think it says ADA failed to get out of its channel. So ADA Cardano, obviously. Let's have a quick look here. Still, ADA holding up better than some coins. Had another rip rally on it going to 160, hey? Didn't see that the last 2 days. So big rally, failed, and now it's coming back down. You're right, about that $1.60 is where you need to clean. But at least it went up. IWM sick? Absolutely, Matt. And that's why when we look at something like IWM, I mean, that basically looks like a Wyckoff distribution at this stage. False break, which admittedly we definitely liked. Talked about this quite a lot over the last couple of months. So, yeah, that was definitely it turns out to be a false break. We obviously talked about the rallies, talked about the 226, all of those types of things. But this is effectively a giant Wyckoff distribution. And that's what has me really worried about the market is it's unlikely to be false. I mean, how long has this created itself for? A long time. Now, is it going to be the sell-off that ends all sell-offs? Unlikely, but certainly could be further decline. Snoozer says, just dump a few bunks, he says, into stocks every month and you don't really care about ups and downs. Yeah, you can definitely do that. It's called dollar cost averaging. Dollar cost averaging and quality can be good. Really what you're doing instead when you're trading is you're just finding very specific opportunities that are statistically high in probability. It's not so much that you have to be worried about, as you said, the rest of the market. In fact, I always suggest when we do the mentoring, we do like you have an investment account, you have a trading account, and then you have like your gambler account. Yeah. And the reason why I suggest that is because they're separate things. So you take your trading profit and you put it into your investment. You take your gambler profit, if you have any, and put it into investment. And this is just really to stop you making poor decisions in your other two accounts. So yes, this bit you should never really be too worried about. This bit over here, well, of course, it's all about picking the right periods, the right times, and right statistical averages. And if you're investing, then you should never really be too concerned about the market. You are correct. Tom, you talk about a lot about quality. What's on your list? Well, actually, a lot of my quality is basketing concepts. And therefore, I get ultimate quality. Because when you basket a concept and you buy, let's say, top 10 stocks in that area or however else you may basket, sector, etc., you don't really have to worry so much. You always hold the quality. So you're buying the concept and you're buying the concept break or the concept earnings result or the concept movement across the board. You'll make a little bit less money, but that's true quality. Yeah, very specific stocks, because the problem with doing stock analysis when you're investing is that you have to do fundamental analysis as well. It can be time consuming. So while a lot of people here understand Tesla intimately, they spend all day watching Tesla videos, looking at the Tesla stock, reading Tesla notes, reading Elon Musk's quiz notes, everything like that, and understanding the business. What's the main problem with fundamentals, guys? Does anyone know? What is the main problem with fundamentals? And there's only really one. I love fundamentals a lot, but what is the main problem? Anyone in the chat, let us know right now. Eli Colner says investment account equals real estate. Fair enough. I understand why. I got no problem with real estate either. We are in the topping process. Lags price action, insane PE ratios, not so much any of those things. Fundamentals, the problem with it is it's time consuming. Because if you just look at stats and numbers, you're not going to get the X factor. And I believe that when you're talking about making fundamental decisions, remember the market is meant to be efficient. And in general, it is partially efficient. So for you to be able to beat the market, you have to look at the X factor. Think of Tesla. The market was being efficient based on the stats, but there was an X factor there that some people understood. And it's that X factor that really makes the difference. But the problem is to get the X factor, how much time do you have to put in? A lot. It's hard to even have over 10 stocks that you really understand with the X factor additional. So you really limit yourself to how many stocks you can have because just don't have enough time. All right, guys. Well, we'll leave it there. And thank you very much for joining us. Thank you to the 800 plus people that came through. Hopefully, you're not freaking out too much about the market at the moment. Bitcoin, Ethereum, all these types of things still finding some support. The big news story is, of course, gold, platinum, silver, all bouncing through key resistances and having nice runs on them. And the next stop we hope for gold is something like that 1870. We'll talk about it more in the daily show. 2-year, while it's been rising, has dropped a little bit from the peak of the session here. So we continue to look at yields. Next Wednesday, FOMC statement. Remember, that's going to be a big deal. VIX is now 23.84. So something to think about. And the stock market itself is currently in decline. Coming into the 450 on the SPY or the 4500 on the SPX, this zone may be some form of partial rally. We have now seen quite a few of sell-off days, which usually means you get a green, but that may be met by a serious sell-off. So I think it's a time almost to do nothing and just to wait for base formations. Hyperstocks aren't going anywhere right now, guys. They haven't formed base. Any of these big crashes generally, it takes a little bit of time for those types of stocks to turn around. So don't feel FOMO. If you do feel FOMO, maybe practice the concept of scaling, because that will at least save you from being all in at the wrong price. And yeah, we'll see you tomorrow for another video. And of course, later on today for our main show. Bye for now. Thank you so much for the donations. Thank you for the support. And as always, keep it real, guys. And I hope that you have a great day. Bye for now.